Let's do a trip around the markets this morning because there's been a lot of action here really over the last 5, 6, 7 days. So here's what you need to know before the bell this morning. We've had a 4.5% rally over the course of the last 5 days. It's been one heck of a good rally here for markets. We've cleared the 100, we talked a little bit about this yesterday. We've cleared the 100-day, we cleared the 20-day. We are right into the 50-day moving average yesterday, stalled there. That's where we're going to open up this morning with markets looking to challenge this 50-day moving average. We are back on a buy signal on the MACD. So again, that's going to provide some buying impetus for the markets. That'll help support asset prices here in the near term. And we're not exceedingly overbought. We're starting to move back up into short-term overbought conditions, but we're not there yet. So again, there's still some fuel here to push this market higher. But this has been a really, really strong rally ever since last, not this past Monday, but the Monday before last. That sell-off and that whole concern about the Japanese yen, the yen carry trade. We had 2 days where the markets just gap lower. It looked like this market was really starting to peel off. And then magically, liquidity came back to the markets and we've had this very nice rally. So again, this is all fine right now. The bullish trend still very much intact. If we can clear the 50-day moving average and stay above that through Friday, this correction's over, at least for now. Now, having said that, though, one thing driving this market rally right now is share buybacks. This has been a big part of this, and that's why you've seen the big tech companies in particular leading the charge here over the last few days. That window starts to close again September the 5th. So buybacks are going to start coming back out of the market because we start reporting earnings in October. So that window will close around September the 5th. So we're going to start losing that buying power right at the time that we began the historically, seasonally, kind of that seasonal period where markets tend to de-risk going into the election. And again, as we talked about before, given this year is likely going to be a contentious election, we could very well see that de-risking start to occur late September, early October, at a time where buybacks are closing out of the window. Those windows are closing out for buybacks. So that could potentially provide another flashpoint for another correction or another pickup in volatility heading into the election. On the bond side of the portfolio, of course, yields had rallied up a bit. We talked about previously a couple of weeks ago that it was when yields had really dropped sharply because of that yen carry trade blowup. We said you really can't buy bonds here because they're too overbought. Yields rallied back from that a bit. Again, that wasn't surprising, but of course with the latest CPI, PPI reports and expectations the Fed's going to cut rates, yields have started to come back down again. So we had a nice reflexive rally. Yields are oversold. This is inverted, right? So when yields are oversold, they're actually overbought. So again, I would expect here over the next few days to see yields kind of rise back up a bit. Again, I wouldn't try to buy bonds right here, right now. They are overbought. Yields are pushing, fairly overbought levels. So expect a bit of a retracement. I wouldn't be surprised to see yields come up to around 4%, but that will probably be a much better buying opportunity versus where yields are right now. Jumping over into crude oil, this has been kind of an interesting thing in the crude oil space. Crude's actually had a decent rally here over the last couple of weeks. There's a tremendous amount of shorts out there on oil prices right now. So again, any type of issue that kind of sparks concern over oil supply, there's a lot of shorts that are going to have to be covered if oil prices rise. So there is a potential short-term risk of higher oil prices, particularly as we move later into September, October, going into the election. But again, we're on a buy signal for oil prices. This will, of course, translate into a better positioning for energy stocks as well. And energy's been doing okay. They haven't been doing fantastic. But again, oil prices drive what goes on in energy stocks because of that input of the commodity price. And again, you've seen that rally in oil prices. You've seen a rally in energy stocks in general. This is XLE, which is the energy ETF. But again, I think there's a decent setup here if we get some type of activity. But again, be a little cautious with energy exposure. It's on a sell signal right now. You've got a potential here, kind of this kind of downward trend in the markets. So lower energy prices and lower oil stock prices are certainly not out of the question. So be cautious in that space for right now. That's what you need to know before the bell this morning.